Hello, everyone. We have quite a bit to chat about today. I'm going to be looking at some latest numbers that look at the changes we can expect in Canada's population growth over the next couple of years. I think a lot of people are underestimating the impact this might have on the housing market. We're going to chat a little bit about development charges in Toronto. And finally, the federal government announced that they're looking into big corporations buying homes. Should they put restriction on them? Shouldn't they? I'm going to unpack all of that this week. My name is John Pasalis. My team and I help buyers and sellers throughout the Toronto area make smarter real estate decisions. If you'd like to meet with me and my team, just click the link in the show notes below or shoot me an email at askjohn@movesmartly.com. So a few weeks ago, I can't remember, I kind of had a video that unpacked some of the changes that the federal government is announcing to Canada's population growth targets over the next couple of years. They reduced immigration numbers from about 500,000 to just under 400,000. But they're looking at making big changes in the number of non-permanent residents moving to Canada. And in fact, actually making that number negative, which means more people leaving than are entering, which means our population growth will be actually on the decline, at least in the terms of the number of non-permanent residents. So the Parliamentary Budget Office in Ottawa came out with some latest numbers and forecasts of how they expect all of this to play out. And when we look at the annual change in Canada's population growth, we know it surged over the past couple of years, hitting 1.2, 1.3 million people per year. Obviously, a massive boom in population. But over the next couple of years, they believe Canada's population growth will actually be negative. More people will be exiting than are entering Canada. And of course, that will slow things down in terms of the demand for housing. Now, of course, the question is, well, how is it going to be negative? Don't we have still 400 plus or 380-ish thousand permanent residents moving to Canada each year? And the answer is correct. We do, but we have more than that are leaving. This chart is from BMO, Robert Kavchik, showing the number of non-permanent residents in light blue, and that number is kind of deeply negative. So what happens if the decline in non-permanent residents exceeds the increase in immigration, then you have negative growth, and that is likely what we're going to see over the next couple of years, assuming the feds can kind of hit their targets. Now, the Parliamentary Budget Office also had some numbers on expected changes in household formation, and that they also anticipate will be negative over the next couple of years, which of course has negative demand and decreases the demand for housing over the next 2 years. Now, on top of that, they actually think our economy or country will see a record number of completions over the next couple of years. They increase their forecast, and that, of course, will fuel a lot of supply in the market in a period where demand, or new demand, I should say, from population growth is cooling down significantly. Now, this, of course, is going to have a pretty big impact on the market. Now, how will it impact the market? I mean, listen, when we think about the supply that is coming on the market, this is, I'm going to look at some stats that show the number of units under construction in the province of Ontario. And we'll see here that over 70,000 or close to 90,000 units are either condos or rentals. Most of those condos are converted to rentals. We have about 10,000 low-rise single-family homes. So a huge amount of inventory in the rental pipeline. Now, the challenge is going to be, of course, that when we think about the fact that non-permanent resident numbers are declining, non-permanent residents tends to be the type of people who are renting. So this is going to take a lot of pressure off of rentals. To what extent it takes pressure off of condominium rents versus rents in suburban low-rise homes. Many of the non-permanent residents were students, so they're renting rooms in houses. But either way, it's going to take some pressure off of rents. And I think this is an important consideration we have to think about. And I think this is partly why some investors are looking at exiting the market, because even today, we have almost a record number of rental listings on the market. The only period that was higher was actually during peak COVID, when people just started leaving the downtown core. Outside of that, high volume of rental listings, high volume of condo listings. So again, if the population growth goes negative, it means, we're completing 250,000 homes per year with no additional demand and perhaps like negative demand, a decline in demand if population growth is actually shrinking. So this will take pressure off of rents very likely. Will it take pressure off home price appreciation? It probably will as well. We're probably not going to see as much growth, but again, home completions at 10,000 sort of in the pipeline is for all of Ontario is not a huge number. And this tends to be where a lot of families end up buying. So it's very possible we might end up seeing slightly different dynamics, more stable, maybe even a busy low-rise housing market, but the condominium market more sluggish. And again, partly not because there's not demand for condos, but because a lot of condominiums are being used as rentals. And if rental demand plummets, of course, some of those investors are going to want to exit the market. So it's going to be important to kind of keep an eye on these dynamics. I think people aren't really thinking about how this will all play out over the next couple of years. I mean, none of us really know exactly how it's going to play out, but certainly we need to be keeping an eye on these trends. So that said, I'm going to quickly take a look at development charges in the city of Toronto. We did a segment a little while ago about reducing taxes on condominiums and on new housing to kind of drive a little bit more sales volumes because sales are obviously screeching to a halt right now. And this chart from Sean Galbraith, who's been on our show before, shows the development charges on 2-bedroom condominiums or apartments, I should say, which include potentially rentals in Toronto, which hit $80,000, an unbelievable surge. I mean, if you go back 10 years ago, does it even have what it is? Yeah, 10 years ago, they were probably about 15,000. So obviously, this is a huge increase in taxes. As we said on the show, the city of Toronto basically saw housing as this cash cow that they could just increase taxes unbelievably high. No one's going to care. And again, as I said in another episode, they got away with this, quite frankly, because people were just lining up to buy condos right up to 2021. I mean, there was just so much demand. It didn't really matter what the price was. So this is partly why no one was really paying attention or cared about this even 2-3 years ago. Because people were lining up to pay $1,800 a square foot for a pre-construction condo. It didn't really matter what the city was charging because there's more demand around the corner. I think this is partly why the city did this. This is partly how the city got away with it for so long. But again, obviously now we're in a much slower market. The growth, even since 2021, fine. Development charges have gone up from about 55,000 to 80,000, so about 30,000. No less than that, $25,000 difference. So that, of course, is not the reason, I don't think, as far as I'm concerned. I said in a previous video, this $25,000 increase over the past couple of years is not why the construction market has halted. It is a bigger issue, but the issue is, development charges have to get back to a more reasonable level. Taxes on new housing work a lot like taxes on alcohol and cigarettes. They discourage people from buying, and that's exactly what we are seeing today. So hopefully we see policymakers make some changes. Now, last thing, the federal government came out and announced that they're going to look into whether corporate buyers should be allowed to buy homes in Canada. Should they put restrictions? And this is from their announcement. They said Canadians purchasing a home should be bidding alongside other prospective homeowners, not against very large corporate investors. Now, I would say that it doesn't matter if the investors or the corporations are large or relatively small. It doesn't matter if they're buying 5 homes or 100 homes. Buying homes through corporations has a significant tax advantage, which without getting into we're not going to get into it now, but the point is that certainly investors buying through corps have more leverage and more advantages over a family who's saving their down payment from personal savings. So I personally don't think it matters if it's a very large corporation or small corporations. I think the effect is the same. Now, when we talk about corps, there are people like me or the government or most people, when we talk about kind of banning them or restricting them, we talk about all corporations. And of course, the answer is no. I mean, we need companies buying homes. Of course, builders who are buying homes to assemble lots need to buy through corporations. Anyone who's buying a single family home and is converting it to a fourplex or fiveplex is buying it through a corporation, and they should be doing that, and they should be able to do that. We don't want to ban that because those investors are creating housing. What largely this whole policy and what most people are talking about is that corporations are just buying single family homes and kind of just renting them out as investments, not really doing anything, not converting them to fiveplexes, just sitting on single family homes. When they do that, they're of course shutting first-time buyers and families out of the market. Now, is putting restrictions on corps the solution to our housing crisis, or this missing piece in the puzzle that's going to solve everything? I mean, the answer, of course, is it's not. There are no single solutions to the housing crisis. This policy or these ideas are just more about what direction do we think our country should be going in? Do we think homes should be, especially homes that were built and designed to be owner occupied, should they be for people who are going to live in them, have some security of tenure, going to have that as an investment for the next 20 years for their retirement, raise their families, not being kicked out when the landlord wants to move or sell it or do whatever? Do we want housing to be for the people, or do we want it to be a financial asset for corporations? And I think this is what this question is about. So I think if you care about this, and this is important, the government wants to hear what you think. They've announced a consultation that's going to end, I believe, December 19th. Consultation on confronting the financialization of housing is what it's called. And I think it's critically important that everyone make their voices heard, because believe it or not, this is the minority voice. I mean, most housing experts in Canada do not want to put any restrictions on corporations buying homes. And you might say, okay, well, why do they not want to put any restrictions on corporations buying homes? It's an important question. And I'm going to just share a tweet that another commentator, Kara Stern, shared a little while ago when I was talking about corporations buying homes, because I think it kind of summarizes the ideas that we see. I'm not saying this is Kara's idea. I don't know specifically what her thoughts are, but she kind of summarizes why a lot of experts don't want to ban corps. And she said many of them don't want to ban corps because rent's high and rents need to come from somewhere. Now, this, of course, is not a reason to encourage corporations for buying homes. This is not a solution to our rental crisis. When corporations buy single-family homes, they're not creating new rental housing. They're not creating any new housing. They're just taking what was an owner-occupied home, making it a corporate-owned home. And yeah, it adds to the rental stock, but it shuts out yet another family from owning a home of their own. So this isn't a solution. I mean, if corporations want to build permanent rental housing that is low rise, like many are doing in the United States, all the power to them. No one wants to ban corporations from building housing, but when they're buying existing homes, or quite frankly, even lining up and competing with families in new construction sales centers like some are doing, this is shutting families out of the housing market. I don't think that's a good vision, but clearly, again, many experts do. The other point she made was that many housing experts and advocates don't want to put restrictions because they argue for increasing supply big time, she said. So it's not a scarce resource for investors. And I think it's important to understand this idea, because this is actually the bigger idea that many people advocate in favor of, this build, build, build. And if we build so many homes so quickly, no one's really want to go invest in housing. The homes and the land they sit on are not going to be perceived as a lucrative financial investment for corporations or really any investors in the future. And I think this story that most experts are selling, that will reach this point because we'll have so many homes in the economy and in the market that they're not going to be a good investment, I think it's just it's just a theoretical academic utopia. Okay, it is like the vision that the experts are striving for, that they believe exists, but it's not achievable. I mean, you're not going to build so many homes that no one wants to invest in them. Certainly in the short term, we might have that. We might have that in the next couple of years when the government, moves our population growth to negative, yeah, you might see in the short term some investors exiting the market, but that is not a long-term solution. At the end of the day, Canada is going to see its immigration numbers rebound, its population growth rebound, and of course the demand from investments will kind of continue. So these are not real solutions. The idea that we're just going to build so many homes, no one's ever going to want to invest in real estate isn't particularly realistic. So at the end of the day, this idea is really just kind of like a zero-sum game. The idea is that for every home that's bought by investor, it just means another family is shut out of buying a home of their own. You either think that is a very good vision for Canada, as some experts do, or you think it's not. And I tend to think it's not. I think corporations should be building permanent rental housing. I think our stock of homes that were built and designed to be owner occupied should be in the hands of people who wants to own them and occupy them. And that's my thought. So if you agree, I'm going to include a link in the show notes to our government's consultation page. Make your voices heard, because as I said, it tends to be the minority voice in Canada. Most experts are going to be advocating against putting any restrictions on corporations buying homes. Hope you found that helpful. If you have any questions, please shoot me an email at askjohn@moosefriendly.com or just post a comment in the show notes below.